Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me is Prashant Nair. It's flat for the markets, but there has been a recovery from the day's low by close to about 0.5%, and it's led by the metal index. So let's get that up for you on your screen. The metal index is up about 0.75 of a percentage point. Tata Steel is the big winner. That's up close to about 2%. And buying has emerged in many of these FMCG names. So HUL, Britannia, ITC are all in the green. But the big story is going to be on, the fact that over the weekend we had Ola, which revealed the pricing for its electric vehicle offering. And that has taken, that's been the big talking point. So Prashant is here on the big wall, and he's going to tell us what the challenges could be for the already listed players like the TVSs and the Bajaj Autos of the world. Prashant.
Well, thanks for that. So finally, the much-awaited electric two-wheeler launch from Ola happened yesterday. It could be a big disruptive moment for the traditional auto two-wheeler industry. So let's take a look at what was unveiled and how it really stacks up against what is already in the market in terms of electric vehicles and traditional internal combustion engines. So Ola launched two models, the S1 and the S1 Pro. As you can see the specs here, battery capacity is 3 kilowatts and 3.9 kilowatts, and sort of respectively. So the two models, S1 and the Pro, a lot of anxiety has been around the range that these scooters can travel on a single full charge, right? I mean, how much can you travel without needing a charge? I think this anxiety has also been taken care of. The range on full charge is 121 kilometers for S1 and 181 kilometers for the S1 Pro. Now, top speed is good, 90 kilometers and 115 kilometers respectively for both models. The other big thing is charging time. Well, charging time is 5 hours and 6.5 hours respectively if you sort of charge these batteries in your home. And if you use, what is essentially Ola supercharger, their own device, you basically get 50% charging in 18 minutes, which isn't bad. The other specs, in terms of, how the look and feel, etc., it's got a 7-inch touchscreen, display, cruise control, keyless access. It's got large enough boot space, the reverse function, etc., etc. It's got the works. In terms of specs, it's power packed. Now, how does this compare to the EV offerings already out there? Well, Ola has priced its product aggressively, as you can see here. On the road in Delhi, post the FAME subsidies, post the state level subsidies, post assuming a little bit for the insurance cost, Ola S1 should approximately, again this is an approximation, should cost you 90 or 1,000 rupees. If you compare this to what is already out there in the market, you can see what we have here, in terms of what we have. Okay, so this is compared to what is already there in terms of EVs. How about how the Ola S1 compares against petrol scooters, right? Internal combustion engine scooters. Well, here is a look at Ola S1 versus the Honda Activa 6G. As you can see, the price post FAME and state subsidy by the time you hit the road is approximately 90,000 for Ola S1 as compared to around 80 or 1,000 rupees for Honda's model. Now, I have assumed electricity cost at about 10 rupees a unit. It varies widely depending on which state you were in. I've assumed 100 rupees. And for petrol, I've assumed a cost of 100 rupees a litre. Assuming that both these are driven about approximately 10,000 kilometers, not approximately 10,000 kilometers in 1 year, what is the calculation we can get to? Let's just go back to the table. The total working cost, the cost of ownership, right? This includes the electricity cost, maintenance. This is an assumption I've made, right? You include all of that. For Ola S1, it works out to 93,250 rupees. For the Honda Activa, it's about 96,500 rupees or so. So the difference actually is not that large. But this is just 1 year, right? 1 year and 10,000 kilometers driven. The point is, in the case of the battery-operated model, Ola S1, there will be battery degradation and it will require a change in battery, which is a cost which will come up, hit you as a user a couple of years down the line. One is assuming, one doesn't know for sure what the cost for that is going to be, battery replacement. But this is 1 year's the price as things stand right now. Okay, let's move on. What is the impact on the listed space because of what Ola has launched? Well, TCS has the highest exposure to scooters amongst listed two-wheeler manufacturers. As a percentage of Indian two-wheeler demand, Scooters are about 30%. Out of the total scooters sold in India, Honda, of course, is the big one. It's got about 52% share. The others are lesser so. But traditional internal combustion engine companies have and are also getting into the EV space aggressively. To give you a sense, TVS and Bajaj have launched their first electric scooters about a year and a half back. Scale up perhaps has not happened as they would like. Hero, by the way, is also going to launch its fast-charging electric scooter by March 2022. It's going to launch another EV with battery swapping in the second half of 2022. Another play Hero has in the EV space, it's got 35% stake in Ather Energy, which launched its first electric scooter in 2018. Honda is the surprise here. With a 52% share in the scooter space, in India at least, it's not launched an electric scooter so far. I mean, the reason I wanted to, electric scooters have been there around for some time in India, but I think Ola's launch really galvanizes attention in terms of, what this landscape is going to look like over the next many, many years. Ola has got the capacity. I think what people will now wait for, now that we know the pricing, which is competitive, is consumer experience, consumer feedback. Once people actually get their hands on one of these vehicles and drive it for a while, I think, that will determine how successful this product can be and what it means for the overall market. Back to you.
Prashant, thank you very much for running us through that. The purchases start on the 8th of September. They will be doing deliveries from October. And if you'd remember, the company had opened reservations earlier on for a nominal amount of $499, and they'd received more than 1 lakh bookings in a span of just 24 hours. Incredibly competitive pricing. Let's move on and talk about the other big story of the day, and that is Vodafone Idea. The company has reported a weak set of earnings. In fact, their losses have widened to 7,312 crore compared to sub 7,000 crore a quarter ago, hurt by A, higher interest costs, and secondly, subscriber losses. In fact, the company has been reporting losses since its merger, which now aggregate to a total loss of 1.4 lakh crore over the last 3 years. Its quarterly revenues have also fallen by 4.7% sequentially at a time when peers have actually reported a revenue expansion. It's a twofold problem for the company. One, of course, is its high debt. The net debt for the company stood at 1.9 lakh crore rupees, and its finance cost was 1.4 times that of the EBITDA in Q1. And secondly, the company continues to lose subscribers. The subscriber base declined by 12.4 million on a quarter-on-quarter basis. This compared to Jio, which added more than 14 million. Also, its financial position is getting precarious by the quarter. They have dues amounting to 16,800 crores, which are payable in the next 12 months, which includes your spectrum liability as well as debt. And the cash balance is a modest 920 crores. Now, CARE Ratings has downgraded the rating on the long-term bank facilities as well as the NCDs. So, as of now, while the company has not defaulted on its debt, the auditors do qualify that the company's financial position has impacted its ability to generate cash flows, and there is material uncertainty that casts a significant doubt on the company's ability to make the payments and continue as a going concern. So that's about Vodafone Idea. The stock is down 5%. But let's move on and talk about Apollo Hospitals as well as Fortis. These are in focus on the back of the Q1 numbers. Ekta is here with the details. Ekta.
Well, yes, Apollo Hospitals and Fortis are in focus on the back of their Q1 FY22 numbers. Now, Apollo Hospital reported a revenue growth of over 70% year-on-year. This was aided by the consolidation of the Gleneagles Hospital and a low base, but still it was above analyst estimates. Now, margins at 13.8% improved year-on-year, and it was stable on a Q-on-Q basis. Profit at around 491 crores was aided by an exceptional gain of over 290 odd crores, but on an adjusted basis too, the profit was higher than estimates. Now, the next trigger for Apollo Hospitals going forward is a strategic or a financial partner for Apollo Health Co. The company said that they are in talks. We could probably hear something in the next 60 odd days as well. CLSA has upgraded the stock to outperform from sell with the target price raised to 4420 versus 2,900. Credit Suisse has an outperform rating on the stock with a target price of around 4,800 rupees. Fortis too is gaining on the back of numbers, revenue up around 12.6% Q-on-Q. Margins expanded Q-on-Q with a profit which was aided by exceptional inflow this quarter. But valuation-wise, Fortis is also seeing a catch-up as it is a discount to Apollo on an EV to EBITDA basis. Let's in fact listen in to Apollo Health, Apollo Hospitals talking to CNBC-TV18.
are present in 440 cities using 24/7 and have 5,500 doctors online. So yes, there's a revenue model in 24/7 by which it generates its own revenue. It also acts as a funnel into Apollo hospitals as well as Apollo Health and Lifestyle, as well as Apollo Pharmacy.
All right, well, let's take a very quick break here. We'll discuss what's buzzing in the commodity space. My colleague Manisha Gupta joining us in just a bit.